Good morning and welcome to Position Sizing, my take on the markets. It's Wednesday, October 6, 2010, and before we begin, I caution you to invest at your own risk. I don't share in your profits, so I don't share in your losses. Today I want to talk about POMO, which stands for the Federal Reserve's Permanent Open Market Operations. POMO involves the outright buying and selling of securities to permanently add or drain reserves available to the banking system. This is one of the tools the Fed uses to implement monetary policy. In recent history, the Fed has been buying securities in order to add reserves to the system. Back when I was growing up, this was called priming the pump. If you recall, the FOMC announced back in March of 2009 a Treasury purchase program that's commonly referred to as quantitative easing. Using POMO, the Fed purchased over $300 billion worth of treasuries in a 7-month period from late March to late October 2009. On August 10, 2010, the FOMC announced that it would be reinvesting the principal payments from agency debt and agency mortgage-backed securities into longer-term treasuries. The Fed has conducted 17 POMOs since August 17, 2010, to the tune of about $42 billion. These operations begin at 10:15 a.m. Eastern Time and conclude at 11 a.m. I want to show you how POMO affects the dollar and the stock market. First, let's look at the 2009 time frame. You can see that during that 6 or 7 month period, the dollar fell from about 87 to 75 as the Fed purchased all those treasuries. Here more recently, beginning August 17 of 2010, we have a fall from about 83.5 precipitously down to 77.75. Note the head and shoulders pattern on the dollar, which would project a target price measuring from the head to the neckline and down from the neckline to about 71 on the dollar index. Now let's look at the S&P 500, and just as background, of the 17 POMOs since August 17, 6 of them have been at least $3 billion in size. 5 of those 6 are noted here in the last 3.5 weeks, and you'll note that on each of these large POMO days, the market has made significant gains, including the spike yesterday, the spike, the week of the 2 spikes, I guess, the week of September the 20th, and then the week prior to that. Now, here's the deal. The schedule of POMO is released in advance, but you don't know the exact size of each operation until the operation is complete that day. There is one last POMO scheduled for today, October the 6th. The size should be about $2.64 billion. And one of the questions is, why does the market react so positively to these POMO days? And there's a couple theories. My thought is this: it's not so much that the money trickles into the market directly from the banks. It's more the fact that traders feel like there's a backstop in place while the POMO is going on, and therefore they are more likely to take on risk. The next POMO schedule will be released on Wednesday, October 13 at 2 p.m. On that day, you can go to newyorkfed.org/markets/POMO_landing.html to find the schedule. That's it for today. Until next time, happy trading.